Hello and happy Monday. Welcome to the Purse Strings Facebook Live Money Monday, where today we are going to be talking about self-directed IRAs. My name is Maggie Nielsen. I am a partner at Purse Strings, and we are all about providing education for women so they can be what we like to say is financially fearless. And so then when they are ready to, start planning for retirement, they're getting divorced, they're getting married, need life insurance, any of these, financial transitions or transactions, we have top tier financial professionals who are willing, ready, and able to serve our female market. We call those professionals our Purse Strings approved professionals. And Erica here is one of them. So we're so excited to have Erica on today to talk about self-directed IRAs. I know I'm going to mess that up at some point, call them RIAs, but here we go. But before we dive into all that fun, Erica, could you give us a little intro of who you are and what you do?
Sure. So my name is Erica Figueiredo, obviously. I'm the marketing specialist here at Next Generation. I've been with the company for just about 4 years. And basically what I do is just kind of head a lot of our marketing activities. So presentations like I'm doing today, our webinars, events and trade shows. I do all of our email marketing, copywriting, basically everything marketing related. I'm the go-to person. I also support our sales team, and I provide a lot of education surrounding self-directed IRAs. And I was recently, or I should say, I recently earned my self-directed IRA professional designation, which is also known as the SDIP from the Retirement Industry Trust Association, also known as RITA. So I'm very proud of that accomplishment. It basically just means that I understand a lot of the kind of working information around IRAs in general and how they work and kind of what they can do. So that's me.
Well, congratulations. We are excited to have you on. Clearly, you have the credentials and the expertise. And so we're excited to talk about this today. And if anyone has any questions during the conversation, throw them in the chat. We're happy to help. If you're watching the replay, you can still post them and we will work on getting those answered for you as well. So we're just going to dive in with the basics. What the heck is a self-directed IRA?
That's a great question. And it's probably one of the ones that I like to cover first and foremost, because it's probably one of the most understood or misunderstood questions out there, because the term self-directed is widely used across the financial services industry. And what you'll see if you're at like a major brokerage house like Fidelity or Charles Schwab is they offer this kind of self-directed product where you can essentially build your own portfolio, which in its sense is a really great idea, but not exactly what we do here at Next Generation or any other custodian like Next Generation. We are what's called a directed custodian. So we are not a fiduciary. So we don't provide any financial, legal, or tax advice. That's just the one thing that I like to kind of get that out there is, we're not your typical advisors. We're basically the middleman between the investor and the investment. And the investment that you would hold in a self-directed IRA is usually an alternative investment. It's not the type of investment that you would normally find within your public market. So it's, not your stocks, not your bonds, not your ETFs. It's, the alternative space. So you've got real estate, you've got private equity. So your private stock, like startups and private companies, LLCs, limited partnerships, venture capital, things like that. Another big asset class within the alternative space is cryptocurrency. Those that can be held in a self-directed IRA. But the biggest difference between, what we do in terms of self-directed IRAs and then what brokerages do in terms of self-directed IRAs is just the type of investment that you're including within the account. You can open the same type of account that you can at any brokerage, like a traditional or a Roth or a SEP, if you're a business owner, even a simple or a solo K. You can even self-direct an ESA, which is an education savings account, or an HSA, which is a health savings account. And basically, like I said, the only difference is just what you're including. We hold those alternative investments, like I spoke about earlier.
Interesting. And so, why would this be a better fit or a different fit versus just going for a regular IRA? Is that if you just want to get into different markets?
Yeah, typically for most people, the value add is really the tax advantages. Most of the time when you're investing in things like real estate, or startups, hedge funds, your typical brokerage houses like Fidelity or Charles Schwab, they're not going to let you hold those. So if your goal is to save for retirement and you're investing in these types of assets, that is really what motivates people to open these types of accounts.
Okay. And so how much, I know we're kind of talking about this title, self-directed, how it's a bit different. How much hands-on work is there really for, just a person? Is it, really being in the account and picking and choosing, or is it still kind of overarching managed? Does that make sense?
That's a great question. And I think it depends on what your goal is. Obviously, you have people that are investing in real estate through their IRAs, and they're very hands-on. Like they want to be a part of the process, but you can also be as passive as you want to. The only thing that I really like to talk about when it comes to these kind of things is prohibited transactions, and that may sway you one way or the other. So for real estate, for example, there are certain restrictions that the IRS imposes on these types of IRAs. And it really is just letting you know, like, who you can and can't invest with and different types of transactions that would be considered, unallowable. So, for example, there are certain individuals and entities that you're not allowed to transact with per the IRS. That would include yourself personally. So like a good example of that is, I can't sell the house that I already own to my IRA. And then other certain familial relationships like your mom and your dad, your children, your grandchildren, kind of just basically going up and down that family tree. For whatever reason, the IRS says you're free to transact with your brother, your sister, your aunt, your cousins. It's just nothing up and down that line.
Interesting.
So yeah, it's actually, I have no idea. I'm not the IRS. I don't make the rules.
Yeah.
So it is what it is. And then obviously there's certain like business relationships. Like, for example, if I know of someone, specifically a disqualified person, which is one of those individuals that I had mentioned before, if they own 50% or more of an entity that you'd like to invest in, that would not be allowable per the IRS. And then just certain kind of business relationships, like a great example is if I wanted to invest in like a startup and I am, the VP of that company.
Yeah.
That may be seen as prohibited depending on whether or not I would be, personally benefiting from that. The goal of these types of accounts is to really benefit you in the long run and not right now. So a lot of that is kind of what motivates people, especially if they already have some sort of like working knowledge in the asset class that they're interested in investing in. That really kind of gives them a leg up because it is a very involved process. And I mean that from the sense of like the term self-directed is really what it means. You're making all of those financial decisions on your own, which for a lot of people is very empowering. They really like that. But you're responsible for all of that due diligence on your own. It's not something that we as Next Generation is going to do for you or any other custodian like us. We're not going to tell you, yeah, this investment is a great one, or, you might want to watch out for this one, it's kind of fraudulent. Those are not the types of things that we as a company or as a custodian are responsible for looking out for. So you are responsible for sourcing your investment, doing the due diligence, making all of your own investment decisions, so on and so forth. So like I said, it is a very involved process, but you can be as involved or as little involved as you want to be, depending on the type of investment that you're choosing. Some of them are pretty passive in nature. And if you're going with a company that, or, a service provider that may offer like a turnkey solution, some of those things may not fall under, your responsibility.
Interesting. Yeah, there's a lot going on there.
Yeah.
And so granted, as you just shared, it's self-directed. We kind of make these decisions and things like that. And so, returns are always variable, I guess, depending on your decision. But overarchingly, is there some, does this typically have better returns than maybe your typical investments, or just similar, different? Because, that's why we are investing, or for the returns.
That is a good question. And like you said, it does vary. Kind of like I said earlier, there are some things that we as a custodian cannot do, or information that we cannot provide. So when it comes to specific return rates, it definitely very, very variable depending on what it is that you're investing in. But what we can say is that these types of accounts generally provide and allow for a decent hedge against stock market volatility. Obviously, when you're dealing with alternative assets, especially hard assets or real assets, they tend to bode well during periods of inflation. They can combat the stock market because you're not always, reliant on, daily values and the ups and downs and everything. So a lot of it is really, specifically, with real estate, you have that added control. So you get to decide what you think is a good investment, and that kind of gives you that leg up. So if you're looking to get out of the stock market, then the alternative space may be something that would benefit you.
Awesome. And so how do you even begin to, start this process of getting a self-directed IRA?
The first thing we always like to do and say and recommend is get educated. We do realize that the strategy of self-directing itself is very, very new for a lot of people. Even if you are a sophisticated, maybe even accredited investor, this is probably not something that you've heard of before. So we always like to say, contact someone like Next Generation or any other, preferred custodian in your area. Ask them what you can learn, obviously, because we're not fiduciaries, and you probably won't find a custodian like Next Generation that provides that type of advice. You definitely have to find, a financial advisor. It's always great to work with one, or a tax advisor if you're concerned about specific tax implications, an attorney for legalities, and then obviously your financial planner for general financial advice. But we are here to provide you with the education as it relates to self-directed IRAs specifically. So we are here to support you in that process and kind of paint the picture for you, if you will. Kind of let you know what that process looks like, how long timelines are going to take, what to expect, the different types of documentation you might need. And really just kind of guide you through that whole process.
Awesome. And so it sounds like you might want a team that's all like a team as in a financial advisor, an attorney, maybe a tax person who's also educated in self-directed IRAs or alternative investments, because it is a different realm. And so it's not just, you want to make sure that those people also specialize or know good amount in those areas as well, rather than just like the same equal knowledge of you.
Yeah. So we don't just educate individuals. We educate individuals and their financial professionals, because at the end of the day, like I said, this is a strategy that not really a lot of people know about. When I started the company 4 years ago, if you would have asked me what a self-directed IRA was, and trust me, I was asked it in my interview, I was like, I have no idea. Like, not a clue. So for most people, like I said, this is just very, very new. So like I said, we're not just educating people, we're educating their advisors too, because oftentimes they don't know a lot about these things. They've heard about them. Maybe they have clients that have asked about them before, but not a lot of people really understand the mechanics. What it is, what you can invest in, what you can and can't do, how the process works. So that's where custodians like Next Generation kind of come in and they provide those insights.
Awesome. Yeah. And that's kind of why we're bringing you on today is I know a lot of people have never heard of a self-directed IRA, and just, dabbling a little bit to get those wheels turning to see if it might be a good fit, to see if that's something you want to commit your time to, but also know that, if you have a lot of different interest in these different areas, it could also be super beneficial and super interesting. But it is different than just, putting it in the S&P 500 or something like that.
Yeah, very different.
Yeah. I feel like this has been a lot of great advice just about, or information, just, getting some of that basic knowledge. Is there anything that we're missing that you want to make sure that is shared today with our audience?
I would say first and foremost, if this is something that you are interested in doing, or if you have a client that may have asked this question before, definitely reach out to me so that we can kind of get that conversation started. And really kind of walk you through these processes. I would say first and foremost, if you have any kind of investment in mind, or if your client has any kind of specific investment in mind that they're looking to maybe use a retirement account for, the first step in that process is to always open an account. Because of those IRS kind of rules and guidelines that I had mentioned earlier, you don't want to get into any investment personally that you're planning on using your IRA for. That also is a prohibited transaction. So anything specifically like real estate, because I know that real estate tends to be pretty quick moving. If that's something that you're interested in doing, definitely open the account first and foremost. And then I think the one other thing that I didn't touch on was how you get your money from
that's a big one
into a self-directed IRA. So I'll spend a minute or two talking about that. So you can fund your account one of three ways. You can do, well, I should say technically 4 ways. The first one is a personal contribution. So that's when you're taking personal funds, your own cash, maybe from a bank account that you already have, and then you're contributing that to your IRA. Obviously, with that comes with contribution limits, depending on your account type. Traditionally speaking, if you have a traditional or a Roth IRA, I believe it's $6,000 currently, and $7,000 if you're 50 or older. And then there's other, contribution limits for other account types as well. You also have your transfer, which is a trustee to trustee transfer, which means it's from one account to another. So if you have an IRA currently that's maybe invested in the stock market with a traditional brokerage house, like I talked about earlier, like Fidelity or Charles Schwab, those funds can be liquidated and then transferred to a self-directed account with a self-directed IRA custodian like Next Generation. You can also do a rollover. So if you were previously at an old company and you have a 401k that's been kind of sitting and it's not really doing anything, you can roll that over into a self-directed IRA. Much like any other 401k, you have, like your 403bs, pensions, things like that. Just think of it as like an unlike account, something that's not a trustee to trustee transfer. And then you have a conversion. So if you have a traditional account or a tax deferred account, you can convert that into a Roth.
Awesome.
And those are your 4 ways to fund.
And then I did have this question come up of taxes. We have the Roth IRA versus just a regular IRA, and those differences are really, pre-tax, post-tax.
Mm-hmm.
What is a self-directed IRA?
So a self-directed IRA is just the term. So that's usually what's kind of misconstrued. Your traditional IRA, your Roth IRA, a SEP, a simple, a solo K, an HSA, and an ESA. Those are all account types that you can open and self-direct.
Got it. Okay. Awesome. Awesome. Well, I think this has been a ton of great information just to get people's wheels turning, to get a little bit of information of, what it is and if they want to get started. If anyone does have any more questions, you can reach out to Erica. Her email's been going through the bottom of our live. She's also one of our Purse Strings approved professionals, so you could reach out to her on our site, pursestrings.co. And yeah, don't be afraid just to start a conversation. I'm sure you have a free 20-minute consultation just to get things started and to get some of that education going. So don't be afraid to jump in and give it a try. So until then, we'll see everyone soon.
Thank you for having me. I really appreciate it.
Of course. Bye-bye, everyone.
Bye, guys.